so we're going to start. Andrew's going to come up. So I'm going to start doing the mortgage talk, right? Again, it's just going to cover general information that you need to know. Anything that's a little bit more detailed, we can sit one-on-one, or I can give you kind of a general overview of that. But there's tons of products out there, tons of different programs out there for first-time home buyers. You know, self-employed individuals are a little bit different, but we'll get into all that. So rates right now are actually going down. Fixed rates have gone down in the last few months. The prime rate that where variables are determined has stayed the same over the last 3 or 4 increase periods that they could have increased them. They've actually stayed the same. So, and fixed rates have gone down. So typically variable rates are actually lower than fixed, but right now fixed are actually lower than variable rates. Yeah. So we'll get into the rates again soon. How to qualify for a mortgage. I'll tell you the 4 main things that all lenders are going to look for. What are the fees involved? We'll get into all of that. Closing costs that you have to consider, fees before closing. A lot of people think there's uncertainty in the market. I don't, and Andrew can speak to that, so that'll be part of his presentation. I'm not going to touch too much on that. And a lot of people are thinking, is the market going to crash? Is the market going to crash? Because they're used to 2017 when houses were selling in half a day for $200,000 over asking, which is not normal. That wasn't normal. So we're kind of, again, Andrew can speak to the market a little bit more. So why use a mortgage agent? In the past, mortgage agents were seen as someone you go to when you couldn't get approved from a lender. You had bad credit, typically. So you would go to Scotiabank, CIBC, RBC, TD, you know, your 5 major banks. And if they said no to you, it's typically because you had something wrong with your application. They send you straight to a mortgage broker. That's not the case anymore. We have access to the big banks. We work with the big banks. And as I mentioned to you guys earlier, we do A's, B's, and privates, right? So we have access to a multitude of different types of lenders. We're basically a one-stop shop. You guys don't really have to do very much of anything when you're using a mortgage broker. You have to fill out an application, provide us with some necessary documents that the majority of lenders are going to ask us. So income qualifying documents, pay stubs, job letters, you know, that type of stuff. Tax, in some cases, T1 generals, T4s, but that's all basic. If you were to go directly to, say, like a Scotiabank, they're going to ask you for the same stuff. So we do all of that for you. We kind of look through all the products that are out there and see what fits what your situation is the best. So we do cover a wide range of mortgage financing options. So again, big banks, trust companies, credit unions. Now they vary slightly. Big banks, trust companies are federally regulated. Credit unions are provincially regulated, so their rules are slightly different. There's a little bit of a wiggle room for us if we're using a credit union versus a big bank or a trust company on the A side. So I'm going to speak more to like your traditional mortgage, good credit, good income, that type of stuff. If it gets into anything else, it's more of a one-on-one type of conversation and what requirements we need for those types of lenders. We have specialized knowledge in mortgage lending and leveraging. For me to sit here and say that I know everything about every product, that would be a lie. There's way too many to know, but I have the team of underwriters that sits in that little room that know everything about every product that they're supposed to know. That's what I pay them to know. I spend most of my time dealing directly with the client. Okay, I get the necessary information I need to get, pass it on to them, and they do all the, you know, the legwork to see, because they know the products in and out, right? So I know the basic information of most of the products, but they know every single detail of those products. We offer mortgage investment options. So if your plan in 5 years is to purchase another property as an investment, we can sit and work on a plan with that. We can speak to Andrew about what your options are real estate wise, and I can do the financing portion of it. And we won't just tell you no, right? If for some reason you don't fit into that A category and you need to be in a B short term, we'll put you in a B if that's what you want, and then we'll come up with a plan to get you out of it. A B and a private mortgage are never long-term solutions. They're short-term solutions with a plan to get you out. Okay, so if you ever see someone, again, like I said, unless it's you're working with investors who don't care, that's a different type of story. But if for whatever reason your credit is bruised, we'll get your credit back up and move you over, you know, within the next year or two, however long it'll take. But that we develop a plan for that. So basic mortgage terms to know. So the term is the amount of time you technically be on contract with a bank or a lender. Okay, so it's your 5-year term, your 1-year fixed term, that type of stuff. Okay, so you're on contract with the lender for that period of time. They go from 1 to 10 years. I've never done a 10-year. I've never done a 7, 8. The most I do is 5. Okay. Amortization is the amount of time you'll have to pay the mortgage off completely. So it's usually 25 years or 30 years. Okay. Interest rate is basically the amount of rent you're paying the bank to use their money, right? So a fully open term is you can pay back the mortgage at any time without any penalty. That usually comes with higher rates because they have to offset any potential penalty that they would charge you, right? The bank is never going to lose money, right? That's just the way it is. A partially open term, they give you certain prepayment privileges, and they'll determine if you have to pay a 3-month interest penalty or an interest rate differential penalty. Now each bank calculates that a little bit differently. So it's basically the difference between the mortgage rate and the lender's current rate, right? So if the lender's current rate is higher, typically you'll get charged a 3-month interest penalty because they can lend that money for more and charge more interest on it. If their current rate is lower than what your rate is, they're going to charge you the interest rate differential because they're losing money essentially. Okay? And a fully closed term means you don't have the option to pay the mortgage back in full at any point during that term of your mortgage, but each lender does give you a prepayment privilege, so you can, put a little bit of lump sum towards your principal throughout the term within a restriction. Pre-qualification versus pre-approval. Sorry, it's a lot on one slide. They often get mixed up. They're very different. Okay, so pre-qualification is basically me giving you, say I were to talk to you on the phone. I make $100,000 a year. I think I have good credit. I have a down payment of about $60,000. What can you get from me? That's all I really need to know, right? So it's not anything. I'm not doing any digging into your credit. I'm not getting any employment verification, nothing like that. It's just me going off of what you're telling me. So you don't really need to fill out an application for that. It doesn't require a credit check. It's not based on a review of your finances, so I'm not looking into any of your income or anything like that. If you're in, CRA debt, tax arrears, that type of stuff. It may require an estimate of down payment, not always. Will the lender of the mortgage give you an estimate? Yeah, so I'll give you an estimate just based on you make $100,000, you can typically qualify for about a $500,000 mortgage. It's just an estimate, right? Will the lender or agent give you a specific loan amount? No. I can't say you're going to be approved for a $700,000 property. I don't have enough information to give that to you. And will we give you interest information? No. Because if I say to you I can get your rate of 2.89 and then I see that your credit is at 500, that's not happening, right? But and Andrew's sitting in the back laughing. Yeah, it's going to go way higher.
6%.
Yeah. But people will only remember that 2.89%. They're only going to remember what benefits them, right? Pre-approval, it involves more thorough and extensive analysis of down payment, income, credit score, debt. Okay, so you will have to fill out an application. It does require a credit check. It is based on a review of finances. It does require an estimate of down payment. We won't give you an estimate on the loan. We'll give you a specific loan amount. Okay, and we will give you general interest rate information. A little bit more accurate interest information at that point because we know based on what we've seen, we can probably 99% guarantee that that's a rate you're going to get. Okay? The mortgage stress test. Have you guys heard of it? Yes. Okay, so basically what it is, and it was implemented in January of 2018, so January of last year. So it's basically qualifying you at a higher rate than what you would actually pay on your mortgage, which would in turn mean you're going to qualify at a higher monthly payment. The reason they did that is kind of to slow down the market because in 2017 it was crazy. My next door neighbor's house sold, and I'm not even joking, half a day for $90,000 more than it was listed for. Okay? That's how crazy the market was. Another house down the street was listed for $1.2 million and it sold for $1.4 in like 2 days. It was crazy. We had a lot of investors coming in. They had the money. Why not? Right? So it kind of slowed down the market a little bit. But now it's making things slightly more difficult for especially first-time homebuyers and millennials to purchase a property. So the way it'll work is they're either going to stress test you at the benchmark of Canada rate. So it's an interest rate at which other interest rates are calculated, which is 5.34 currently. That has gone up, obviously, but it stayed the same for a while. Or the contract rate plus 2%, whichever is higher. Okay? They just want to make sure you can maintain payments if the rates do start to go higher. Okay? So if you're looking at a mortgage of $350, a regular monthly payment, what you would be paying with your interest is about $1,690. The stress test monthly payment would be $2,103. So there's quite a difference in payment, right? Now, of course, you'd be paying this amount generally, roughly, but they want to make sure you can pay that if you need to. Okay? there is a difference between big banks, trust companies, and credit unions. Big banks and trust companies they're federally regulated, meaning they have to stress test you. They don't have a choice. Credit unions are provincially regulated. They can stress test you, or they can qualify you on contract rate. Okay? Gives you a little bit more purchasing power. Rates are slightly higher, but I'm not talking from 3% to 6, I'm talking like 3% to 3.3. Not bad, right? It's just the way they make up their money. But it's better than qualifying at 3.3%, it's better than qualifying at 5.34%, right? Gives you a little bit more purchasing power, which Andrew likes. Makes his job a little easier sometimes, right, Andrew?
Yes.
Yes.
Heavens yes.
Okay, so there's 3 types of mortgages nowadays. One is an insured mortgage, one is insurable, and one is uninsured. Okay, so with the insured mortgages, the client has less than 20% down payment. Okay, they have to qualify at the benchmark rate of 5.34. They don't have a choice, even with a credit union in that case. Maximum amortization period is 25 years. We can't go over that. The client has to pay mortgage default insurance. So what that is, it's actually insurance to cover the lender, but you have to pay for it. Okay? The reason they're doing that is because with a smaller down payment, you might run into some problems. What if you can't pay your mortgage? They have the insurance to cover them. Now the good part about that is it kind of translates into lower rates for the clients. Typically they have the lowest rates, insured mortgages, because they're protecting themselves with the insurance, right? Now the insurance payment does get wrapped up into your monthly mortgage payment. It's not in addition to, okay? But there is HST that you do get charged on that as well because we live in Canada and we get taxed. Insurable mortgages, you have at least 20% down, okay? Property value has to be less than $1 million. It's insured, but at the lender's expense. The lender can choose to insure it or not, and it's no cost to you. It's just whether they have the risk tolerance for the property, okay? You have to qualify at the 5.34, the benchmark rate, and again, the maximum 25-year amortization. With uninsured mortgages, you have at least 20% for down payment or more. You must qualify at the benchmark rate, 5.34, or contract rate plus 2%, whichever is higher. Credit unions, this is where we can use them. So you need to have at least 20% with a credit union to qualify on contract rate. Maximum amortization is 30 years, which is helpful because it spreads your payments among another 5 years, right? And it's not insured.
Can I take a picture of it?
Sure. Oh no. There you go. Okay, so understanding rates, fixed rates, stays the same for the term of your mortgage. Your monthly payments stay the same. Okay, so there's benefits to each of these. There's risks to each of these. It's just whatever your risk tolerance is. A lot of first-time homebuyers go for the fixed rate just because they're used to paying. Typically, they're renting, so they're used to paying $1,500 a month without it changing. They kind of like that same stability, security in their mortgage payment, right? A downfall of a fixed rate is typically if you have to break it, it may have higher penalties than a variable rate mortgage. And if, for whatever reason, the fixed rate drops during the term of when you're on contract, you can't take advantage of that. Was that the door?
Yeah.
I'm trying to think the door. No, the door.
Get it.
Thank you. Good hearing. But I mean, I personally have a fixed rate mortgage. I don't like I need to know what's coming out of my account and I don't care about anything else, okay? So variable rate mortgages are based on the prime rate. So the prime rate is the rate that banks use to lend to another bank. So they lend money amongst each other, right? That's how they get lots of money. This rate may or may not increase during the term of your mortgage, okay? So if the rate changes, the monthly payment stays the same, but the amount that goes to your principal and the amount that goes to your interest changes, okay? So it kind of looks something like this. Put this down, I was gonna start clicking. This is your payment if it starts to change, okay? And that's what goes to principal, what goes to interest. So if the rate goes up during the term of your mortgage, more of your payment goes to interest. The bank is always gonna get their money first, guys, okay? If the rate goes down during your term on a variable rate, the more money is going to go to your principal, right? Upside of a variable rate is typically to break a variable rate or an adjustable rate mortgage, it's only 3-month interest penalty, okay? Whereas with the fixed, it could be an interest rate differential, which sometimes costs a whole lot of money, okay? So that's where getting to know you as the client comes into play, because if your plan is to purchase a property and then you say, you know, I want fixed because I want the stability of a payment, but I'm thinking I'm gonna move in 3 years. I wouldn't put you on a 5-year fixed. I would probably put you on a 3-year fixed. Most people who get a mortgage will break in the 3rd year, okay? So sometimes it's out of your control, you don't know that you're gonna break it, but for whatever reason you don't have a choice, right? So that's something to keep in mind when I'm talking to my clients. I try to get as much information as possible just to make the better choices for them, present you guys with the better choices. With an adjustable rate mortgage, it's similar to variable. It is based on the prime rate. It's different in the sense that as the rate changes, so does your monthly payment. So it'll then go like this. This is your payment, this is the rate, okay? The downfall of the variable is if the rate starts going too high, you're gonna end up paying like $100. So you say your payment is $2,000, for example, these are just rough numbers. If the rate starts skyrocketing, essentially you could be paying $1,900 to interest and $100 to principal every month, right? But that's where we come in, because we kind of keep track of what's going on. So if any of my clients are in a variable rate mortgage, if I notice that it starts to go up and they're paying more and more and more, I'm like, okay, maybe it's about time we switch into a fixed, okay? Switching from a fixed to a variable is gonna cost you a lot. Switching from a variable to a fixed won't cost you anything, because usually fixed rates are higher. So they're gonna make money on the interest rate they're charging you anyways. This market's a little different, because like I just said, fixed rates are slightly lower right now, right?
But even in times like this, there's still, like, switching from variable to fixed is not a problem.
Yeah.
Even when
Yeah,
fixed is.
it's variable rate to break is always a 3-month interest penalty. Okay.
At the end of the term, can we change it without penalty?
Yes. Anything at the end of the term is up for renewal and renegotiation. So I can move you to a different bank without causing any problems. If I find another bank, so say I put you with Scotia first, and Duca Credit Union has a better rate, a better product at that time at the end of your term, I'll move you over. So the 4 areas that all of the lenders are gonna look at: your income, your down payment, liabilities, and credit score. So my job is to basically identify the challenges, if there are any, and find you guys the right solution, okay? So income, common types of income that they look for, they love salaried income. Lenders love salary because it's easy. Your job letter will say you make $60,000 in salary, your payments, your pay stubs will say the exact same thing. If you miss a day of work, you're still getting paid, typically, right? Hourly is good, but on your job letter, they like to see guaranteed hours if you're hourly, right? Because it's kind of like a salary at that point anyways. You're guaranteed 40 hours a week, you're on salary. Contract, they don't mind, but they ask for a little bit more documentation, okay? Casual, they don't like, they'll ask for a little bit more documentation. Anything that is a risk to the bank, they always ask for a little bit more. Part-time we can use, business for self we can use. Other income that we can use is rental income, foster care income, long-term disability, alimony, child tax benefit, child support, all these other things depending on the lender, okay? Some lenders don't allow for child tax benefit, others do, right? Permanent employment with regular guaranteed income requires less preparation, less documentation. Anything that's non-regular requires usually a 2-year tax return. And again, the lenders can kind of ask us for anything whenever they want.
For the salary category, how many monthly employment is required?
So they typically like a 3-year history of employment. However, if you started a job in January, but it's in the same line of work, they're fine with it usually. Does that make sense? Yeah. So if I used to work at a private school, okay? I went from one private school, I was there for 2 years. I started another private school when I got my mortgage, 6 months before I got my mortgage. So they took my 6-month income because it was a salaried. Salary's a little bit different, but they still want consistency in income, in employment. They don't want you switching from a teacher to a car salesman to a mortgage agent to a real estate agent all in a matter of 2 years. It's a little inconsistent for them. It's a red flag. Why are you changing so many jobs? Like, what's happening, right? So the more consistency we can give them, the better it is for you. Again, there's always exceptions that can be made depending on the lender's risk tolerance. Bigger banks have more of a risk tolerance, but they don't like to use it if they don't have to, right? Down payment requirements. A minimum of 5% is required on a purchase of $500,000 or less. Minimum of 10% is required on the purchase of a mortgage that's $500 to $999. Okay? So if you're purchasing a property for $600,000, the first $500, the 5% is $25,000. The additional $100,000, sorry, is subject to the 10% minimum down payment. So that's $10,000, gives you down payment of $35,000. Okay? Minimum of 20% required for purchases of $1 million or more. Okay? The best source of down payment is your own savings, if you have it. And they typically like to see it in an account for at least 90 days. You can take out of your RSP. They just made a rule change to that. Originally it was $25,000 that can come out of your RSP if you're a first-time home buyer, tax-free. Now it's $35,000 you can take out. Okay?
Does it matter the currency? Is it US dollar or Canadian dollar in the bank?
I don't think it matters. No. I would have to translate to Canadian currency, right? But you can't. I don't think you can take out if you have, say, 35,000 American. You want to take out, they would cap it at 35 Canadian. Yeah. You can also do a gifted down payment. Okay, so if you have family who has a little bit of extra money, we can do a gifted down payment. Typically, it has to be immediate family members. So parent, child, grandparent. Okay, it can't be your great aunt and anything like that. Or it could be borrowed. Sometimes I do have clients who have a portion of their down payment coming from saved cash, and then they want to pull some out of the line of credit. I'm able to pull it out of the line of credit as long as my ratios and numbers make sense on the application. Okay? Understanding liabilities. So anything on your credit report that must be paid back. So credit cards, lines of credit, car loans, student loans. You have to pay them back. If you don't pay them back, they get reported. It's not like car insurance. If you don't pay your car insurance, they cut your insurance, right? A credit card, you don't have a choice, you have to pay them back. A line of credit, you don't have a choice, you have to pay them back. So they put a large emphasis on monthly payment. So if they see a $1,000 car payment, that's almost a mortgage payment, right? That's a lot of money to spend on a car. So it has to work with my numbers that I see once I pull credit. Don't buy the $1,000 a month card, okay? You need to have credit. Credit's important to have. You just got to be very careful with it. Okay? A lot of people, you have to be responsible. You do need credit. A lot of people think, oh, I don't have credit, I'm good. That's actually bad. Not having credit is bad because you have no credit score. Right? There's no history for them to look at. There's nothing to see. Can he manage credit? Can he manage a mortgage? Can she manage a mortgage? You need credit. I also don't want you having 30 credit cards that are maxed out because that's a problem. Okay? So how is your credit score determined? 35% of your credit score is determined through payment history. Have you missed a payment? How many months have you missed? Did you miss 3 months in a row? Did you miss 5 months in a row? Did you miss maybe 1 month? It all gets reflected there. The amount of credit in use is 35% of your credit score. So a good measure of staying within use, if you have a $5,000 credit card, for example, if your credit limit on anything, a line of credit, a credit card, say is $5,000, try not to exceed 30% of that. So $1,500, right? Try not to have the balance go up and up and up. You don't want it to be at a maximum credit limit of $5,000 and you're at $5,000 that you owe them.
If you have 2 different line of credits, and it's maybe
I would say 30 to 35% of each credit.
of each credit.
The length of credit. Typically when a lender
Or you could ask for an increase and take it and don't use it.
yes,
Yeah.
if you're responsible.
Yeah.
Okay? Don't
Yeah.
take an increase to credit if you're not responsible because it just gives you more power to spend. Okay?
Is it your total usability though, like usage, or payer credit card?
Per credit card.
Payer credit.
Or per line of credit or anything like
Yeah.
that. If they start seeing that you're maxed on everything or almost at max or sometimes over, because I have had clients who are over on their credit, what they owe versus what their credit limit is, causes a problem, right? That makes up 35% of your credit score, a big chunk of your credit score. Length of credit. Typically lenders like at least 2-year history of credit, okay? So if you don't have credit, apply for a credit card. Doesn't need to have a big balance or a big credit limit, $500, $200. Use it to put gas when you get home, pay it off right away with your, e-transfer the money. Types of credit, they like a variation of credit. So car payment, not the $1,000 a month payment, don't do that. Yes, I'm poking fun at you. So you don't wanna do the $1,000 a month car payments, but they like a variation, right? They don't wanna see all credit cards, they don't wanna see all lines of credit, but they like a mix of it. And inquiries, so there's hard versus soft inquiries. If you're pulling your credit yourself, it's a soft. If I'm pulling it, it's a hard. And that makes up 5% of your score. Okay, so it's not that much. Any questions about that?
Does having secondary users on your credit card affect it?
I believe it does, especially if it's a joint. Yeah. So if they're not making payments, it can affect you.
The payment is being made.
Okay, yeah,
No problem.
no. It'll just indicate on the credit report, it'll show me if it's a joint credit account or if it's an independent credit account. Yeah. And credit scores range from 300 to 900. 900 being the best, 300 being the worst. I've never seen anyone at 9. I think the most I've seen is 858. Pretty good credit. Okay, now we get into the different types of insurance when you get a mortgage. There's mortgage creditor insurance. This is provided to you by the lender. And then there's term life insurance, which is provided by a third party that has nothing to do with the lender. Okay? What's the difference? What's better? We're gonna get into that. So, underwriting of an insurance policy with the bank, so the mortgage creditor insurance, it's post-underwritten. I start that. And with term life insurance, it's pre-underwritten. So to qualify for mortgage creditor insurance with the bank, all you really need to do is answer 3 questions. If you answer no to those questions, you're pretty much getting the insurance. If you answer yes to any of them, they might ask for a little bit more information. But typically, you're gonna get it. With a term life insurance policy, you're pre-underwritten. They're gonna do a full medical examination of you, okay? Now, a lot of people think that's a little invasive, but I'll explain why. I personally think term life is better. Okay, I'm not an insurance expert, so I don't want to talk too much about this. I do have a director of insurance who calls all of my clients to explain this to them, okay? The reason I like the term life insurance and the way they underwrite the deal, their policy, is because if, when they do that medical review, there is something wrong with you, they are going to say no, okay? You don't have insurance, which is fine. But with mortgage creditor insurance, if you answer no, did you smoke? If you smoked a year ago, you don't smoke now, and you die of lung cancer, they're gonna do that after, they're gonna do all the medical after, and an autopsy or whatever, they're not covering you, but you're still paying for it, okay? Convenience, yeah, it's quick and easy with the mortgage creditor insurance, you just answer those 3 questions, and you're, like I said, if you answer no, you're pretty much gonna get the insurance. Term life may take time, medical investigation, they'll do blood work and everything like that to make sure everything's okay.
If you're already paying for life insurance.
Then we just wanna make sure that you're covered for enough, okay? Because you could be paying it through work.
Different.
That's different, yeah.
On top, like you can have this on top of.
Yeah.
You already did the test and all that stuff.
Yeah. If you have it, then all you would need to do is say if you buy a property, now we wanna make sure that you're insured at least to cover that property, right? So again, the director of insurance, her name's Diana, would call all of my clients to just explain, because a lot of clients do have it, but their policies, they don't really understand their policy. I had one client come in, every 10 years, his payment goes up significantly. He didn't realize that. Hers doesn't. Hers stays the same for the term of the policy, right? So I mean, by the time he reached 50, he would be paying almost $1,000 a month for insurance, which he was like, I didn't know that. She's like, I didn't think you did, right? Portability with mortgage creditor insurance, you can't port it because it's connected to the lender. So if you do a deal with Scotiabank, it's connected to that lender, okay? So if I were to take your deal from Scotiabank to Duca Financial after your 5 years, you would now have to qualify for Ducas. You're gonna be 5 years older, your premium's gonna be higher because you're older now, right? With term life, it's independent of the lender, it has nothing to do with them. So you can port it wherever you want. Premiums are pretty much the same. Amount of initial coverage is determined by the amount of the mortgage. They're gonna cover you for the mortgage amount, nothing more. Okay, they wanna make sure they get their money back if something happens to you. Term life insurance is determined by the insured. You have a house that's worth $800,000. You wanna get insured for $900,000. That's up to you. Okay, but you're gonna pay for the additional, right? Protection on default or illness. If the borrower defaults and can't make a mortgage payment, the insurance will stop. because it's connected with mortgage creditor insurance, it's connected to the mortgage, okay? With term life, even if you can't make your mortgage payment because it has nothing to do with the lender, and you can still make your insurance payment, you're still covered. The amount of continuing coverage. With mortgage creditor insurance, your coverage decreases, but your premium stays the same. So you have a property, okay? You have a property that you purchased for $500,000, okay? You're paying, let's say, $200 a month in insurance. After 10 years, you get your property down to $200,000, okay? You're still paying $200 a month, but if you die, they're only covering that, not the $500 that you started with, okay? They just want to get their money back. With term life insurance, it's constant. You pay $200 a month, you're covered for $900,000 if that's what you asked for, okay? The expiry is at once the mortgage, with mortgage creditor insurance, it's once the mortgage is paid or upon transfer to a new lender. But then again, you'd have to qualify with the new lender. With life insurance, you can do a 10-year term, you can do a 15-year term, a 20, 25, 30, 40, 50. You're covered until the term is done. You may not ever have to use your life insurance. We hope you would never have to use it. But if you're going to pay for it, at least be secured for the full amount that you're paying for, not less, right? Beneficiaries. This is another important one. With the lender, the mortgage creditor insurance, the beneficiary is the bank.
This is huge.
Yes, they
It's
just
very,
want
very
their money.
important, guys.
None of it goes to your family, nothing like that. With term life insurance, it's whoever's on the insurance policy as the beneficiary. Your kids, your parents, aunts, uncles, cousins, whoever you want to get the money if you pass away or something happens to you, that's who it goes to. Okay? It makes a huge difference. Speaking out of personal experience with the death of a family member, we had term life. Okay? It made a huge, it helped. Right? So the number of death benefits. With mortgage creditor insurance, it's only one and it pays the outstanding balance of the mortgage and that's it. With term life, so say two homeowners, you get into a car accident, both people die, 2 policies are paid out as long as 2 people are insured. Right? This is only paying the mortgage, that's paying whoever's insured. Speed of the claim. With mortgage creditor insurance, if you put in a claim, it takes several months in investigation. That's when they're going to start doing the underwriting. They're going to check your medical. Well, he smoked for 20 years. When he filled out the form, he said he didn't smoke because you weren't smoking at the time. You died of lung cancer. Oh, well, that has to do with his smoking. We're not covering him. So you've paid, but you're not going to get covered. With term life, you're going to get paid within days because they've already done most of the medical up front. Okay? Other costs to consider when you're purchasing a property. The deposit on the purchase, so this amount varies, but it does go towards your down payment. So that's the deposit you would put with Andrew to hold the property. Okay? Land transfer tax. It's dependent on the purchase price of the property, but there is a first-time homebuyer land transfer tax that is rebate, that is available. So typically, land transfer tax has to get paid on closing. The lawyers will know though if you're a first-time homebuyer. They'll check title to make sure you want on title of another property ever. Okay? And they've also made changes to the first-time homebuyer policy because now, once the federal budget was reviewed, I believe someone going through a divorce qualifies now as a first-time homebuyer again. So they can tap into their RRSP tax-free, and they can tap into the rebate as well because now they're kind of starting on their own, right? You buy a house together, you're married, you separate, you're on your own, right? Legal fees, typically I just give an estimate between $1,000 to $2,000 to a closing. Title insurance, so this is approximately $100 to $300. The lawyer will take care of that. It's due on closing. It covers encroachment issues, fraud. A lot of people can put mortgages in someone else's name, right? So it covers all of that. A lot of people are like, well, do I really need it? Yes, you really need it. It's only $100. Protect yourself because, yeah, that would be stupid not to. Especially for only $100, right? Mortgage default insurance, HST. So again, that depends on the amount of the insurance that you paid. If you were putting 20% down, you would get charged the HST at closing. Appraisal, I would say between $200 and $500. Sometimes, occasionally, they're more, depending on the property, where it is, if we have to do a rush. But typically, that's where we're looking. And you pay that prior to closing because they're gonna ask for the appraisal before they give you the money to make sure the property's in good condition. And if they have to sell it because you're not making payments, they wanna make sure they can get their money back. Home inspection, get a home inspection done. I would suggest it, Andrew. Yes.
Good idea.
You would pay that prior to closing as well, okay? Property insurance, you must have, or else you will not close a mortgage, but it's not an upfront cost. It's a monthly fee, just like your car insurance, okay? And it protects your home, and the contents in it. So if there's a fire, it's gonna protect you against anything like that, a flood, there's different policies. But I have connections with everyone in insurance, legal, so if you're never sure of who you can go to, we have those options available. We're not forcing you to use our insurance or anything like that, but at least you can call and figure it out if you wanna use them or not. Okay, so there's rebates, incentives, and grants for first-time home buyers. So the first one is federal. It's the RRSP Homebuyers Plan. So again, you can take up to $35,000 out of your RRSP tax-free as a first-time home buyer. If in a 4-year period you or your partner or the other person on title did not own a property. Okay? Now there's restrictions and guidelines to each of these, but the lawyers will be able to tell you this because the lawyers will calculate this on closing. You won't actually physically get, I'm talking about the home buyer's tax credit. No, I'm not talking about that one, I'm talking about something else. Home buyer's tax credit, you can claim up to $5,000 on the purchase of a property on your taxes, okay? GST, HST new housing rebate. This rebate gives you back part of the GST or the federal HST you paid, up to $1,500 for newer substantially renovated home primary residence. Again, keep in mind there's all restrictions and qualification guidelines that you have to meet, but these are some options available to you as first-time home buyers. Rebates, CMHC Green Home. If you have an energy efficient home, CMHC, which is one of the insurers, who would do a mortgage default insured mortgage, will give you a 15% rebate. Genworth is another one of the insurers in Canada. We have 3 insurers: CMHC, Genworth, and Canada Guarantee. They can give you up to 25% rebate. So when you go through Genworth, Canada's qualified for energy efficiency. Okay. Ontario government, so this is the land transfer tax rebate for first-time home buyers, okay? If you've never owned a home anywhere in the world, you're eligible for this. Talk to your lawyer, okay? Because sometimes if it doesn't come up, you own a home in Italy, maybe you'll get the rebate. The lawyer can figure that out, right? The max amount you can get is $4,000, okay? You're not physically gonna get the $4,000, but when the lawyer gets instructed on a deal from the bank and it's ready to close, they'll just deduct it from what you owe them, okay, upon closing. The biggest hurdle in qualifying for the max amount is that all purchasers must be first-time home buyers. So anyone on title has to be a first-time home buyer, or you may receive less than the $4,000, a portion of the $4,000, or maybe not at all, depending. Again, Ontario Energy and Property Tax Credit. Non-seniors can receive up to a little under $1,100 if any costs are related to energy. Seniors can receive up to $1,200 if costs were related to energy. Toronto programs, municipal land transfer tax. So Toronto is the only part of the city that has 2 land transfer taxes. They have a provincial and a municipal. Vaughan does not have. Vaughan only has the provincial. Mississauga, Peel, they only have the provincial. Toronto has 2. Now how this works though is it translates into lower taxes in Toronto versus higher taxes everywhere else, property taxes typically, right? But if you purchase a property in Toronto, you're eligible for the provincial land transfer tax rebate and the municipal, okay? And again, you won't get that money physically, it'll just get deducted from the amount you owe at closing. And that's it. Good. Okay, so I'll kind of go through the process of how I do things. So typically I would get a referral from a real estate agent or a friend, and I'd call the client. Tell me a little bit about yourself, what you do for work, what do you think your credit is, do you have any debts that I should know about, any collections that I should know about. I try to get as much information as possible. What are your plans? Are you looking to stay in the home for, is this going to be your forever home? Are you looking to upgrade maybe in 5 years, 3 years? I'll get all the information from you, then I'll send you the application, okay? I'll collect all the documents up front from you, again, employment documents, that type of stuff. I'll check your credit. just because I wanted to be able to know where I'm gonna place you, right? I'll qualify you for a max purchase price. I'll then call the realtor if you're working with a realtor. I'll be like, hey Andrew, Matthew can qualify for a $700,000 property purchase price. I will not tell the realtor anything about your credit score, nothing like that. It's none of his business or her business. They just want to know what you can afford, where they can take you, makes their job easier, makes their life easier, it makes your life easier. I don't want you going to look for properties that are $1 million when you can only afford $500,000. Because then you have this big idea in your head, oh my god, but I love that house, but you can't afford it, okay? And a lot of people, what they do is they go to the realtor first. Don't go to the realtor first, come to me first. Because again, the realtor is gonna tell you, unless I know what you can afford, I'm not taking you out. Because he's not gonna spend hours in his car taking you to look at $800,000 properties when all you can afford is a $500,000 property, right? Save everybody the time and the stress and the headache. At that point, I'll give him an idea of what you can afford. I'll already have lenders in mind of who I want to take your deal to. Okay, we'll go over that. We'll determine if you guys want a fixed rate, a variable, all of that type of stuff. And then at that time, I'll tell Andrew, take them out. Once you put in an offer, they'll say, hey Rosanna, we have an offer, it was accepted, here's their purchase and sale agreement, here is the MLS listing, submit it to the lender. I usually have 5-day condition of financing, which means it gives me 5 days to go to the lenders, to look at the deal, to see if they want to lend on it. If that lender says no on day 1, I'll take it to another one on day 2. Okay? I don't take it to more than one lender at a time, only because that affects our funding ratios with the bank. We're not supposed to do that. But it gives me enough window to make sure that we can find you a lender. And at that point, again, I know who I'm going to take it to already. Right? Who I think will get the job done. Right? And then once I have the mortgage, we'll get a mortgage commitment from the lender. Once the lender signs off on it, yeah, we'll mortgage this property. I'll get a mortgage commitment. It'll outline, we need an appraisal coming in at value that you purchased it for. I need this extra documents. They always ask for a little bit extra just to cover themselves. Once all those conditions are fulfilled, I get a broker complete status. It then gets instructed to your lawyer. Your lawyer will receive a breakdown of the mortgage, what you need to pay for down payment, all of that stuff, any fees. They do a whole statement of adjustments, trust ledger. They call you in for an appointment, you sign all the documents, we hope there's no issues with any of the documents. If there is, I would correct them with the lender. If there's not, you're good to go on closing. And then the day of closing, you get your key from the lawyer and you're all good. Okay? Any questions?
So the pre-approval, how long is that for? Like how long is it valid?
So I could always do, what I do is, if the rates are really good, if like it's a promo rate, I'll put in for a rate hold with a lender. Now that's not a guarantee that lender will do the mortgage, but again, I should have an idea of which one will take your deal. They'll hold the rate for about 120 days. Okay, so it gives you a little bit of a window. In case the rates do go up, you're still, if they decide to do your mortgage, once I get the agreement of purchase and sale and the MLS and submit everything to them, again, they'll do a full review again of your
If
income.
it's not like a promo rate, like generally.
I can do that as well. I can put a rate hold on anything.
Okay.
Mine are fairly quick. As long as I get everything up front, it takes me less than a day.
So I mean, so from when you do the application, you get the pre-approval, whatever, for a certain amount, you have about 4 months.
Yeah,
to,
typically, unless something happens drastically with mortgage, like the market or anything like
Right.
that, but you're typically good. Unless your circumstances change at work, if you lose a job, then what I told you 3 months ago no longer applies, right?
Second question: if you're buying a property with somebody else, and you're both first-time home buyers,
Yeah.
do you both lose your status as a first-time home buyer,
Yes.
like going forward?
Yeah.
Okay. So that's
Anyone on
probably
title?
okay, but you get the credits for each person, or
No, just
no?
one.
So you So
Yeah,
okay.
just one credit.
So you're
The
waiting.
government doesn't want to give too much money out,
Right.
right?
But it can increase the amount of mortgage you can get if you apply to.
Yeah, obviously there's dual income usually, hopefully someone's credit isn't bruised or,
Yeah.
but then again, there's always exceptions that we can get lenders to make. There's a risk tolerance that they're willing to look at, right? If it falls within, their risk department looks at any mortgage that they approve. They want to make sure that they have the risk tolerance for it. And again, myself and my team know exactly who will make certain exceptions because they've done it in the past, right? We don't like to do mortgages based on exceptions, but sometimes it happens. And there's never been a clear, I think I've had one in two and a half years, that was like a clear cut, there was no issue with the file at all. Like salaried income, great down payment, great credit. I didn't need to do anything. I literally got the standard docs, the bank came back asking for an appraisal, and that was it. That was the easiest mortgage I've ever done. It hasn't been like that since. So, you know, everyone's situation's a little different. First-time home buyers are a little different than people who've been in the market for a while, investors, or, you know, there was something else I was gonna say, I was just drawing a blank. But everybody's, like, self-employed's different than a salaried worker. There's differences in everybody's situation. Okay, Andrew?
We started a little bit late. That's a problem for us, certainly. One benefit of an independent broker is, well, they're here. Banks are usually closed by 8
That's
at the
right.
latest.
Oh yeah, and
One
I answer my phone until 9 p.m. every night. Okay?
That's not, I don't know if that's necessary.
It's not, it isn't, but you know what? Sometimes you gotta do it. I got clients panicking, I gotta answer the phone.
Just press the left click.
That one, yeah.
Awesome, okay. So, I always say this, I've been doing this for years. Whatever the broker says is much more important than it sounds. It sounds kind of, numbers, I don't know if you're like me, you know, I kind of gloss over the numbers and such. It's extremely important than some of the stuff she said. Keeping credit clean and good is very, very important, especially these days. A big aspect, literally just last week, I had somebody working with a bank, I won't say who they are, they may or may not be green, or whatever. The co-signer insisted on it. I could not push them to an independent broker, which I always and always do. Why? Because it's in your absolute best interest. It took like a week to just get pre-approved. I've seen an independent broker get a pre-approval the same day. I think it was 2 or 3 hours. My job is this would have been an easier case, you have the T4s ready, those kinds of things. 2 to 3 hours versus like a week. It's a huge difference, especially in this kind of market. So
Sorry to interrupt, Andrew. Don't fall for the, you can get approved in 60 seconds, because it is.
pre-qualified
Yeah.
is
you're
what the
getting-
word should
You're
be.
getting pre-qualified.
How much you make? Fantastic, you can make this. Again,
Yes.
there's no checking. The rule of thumb is if no one asks for your T4 or something at least to show, there's an issue. There's an issue. They're making stuff up. So that's one thing. The other thing, obviously, any bank you go to, and this has nothing to do with me, honestly. I'm just saying this out of good information. A person at TD works for TD. They're going to give you TD products. A person at RBC works for RBC. They will sell you RBC products, insurance, banks, whatever. So that's fine and dandy. There's nothing wrong with that. There's wonderful banks. I bank with banks, of course. But an independent broker is loyal to you. Their fiduciary obligation is to you and you only. They work for you. You understand the difference? Whose interest do they look out for? Not RBC, not First Financial, not anything. First National. None of these banks, none of these lenders, they look out for your best interest. By nature. And by the way, they only get paid when you get your mortgage.
And you don't pay us, typically. In most cases, you don't pay us, the banks
So-
pay us.
Their best interest is to get you a good product, make you very, very happy, and actually close the deal. That's the big thing. So I'm the realtor. One thing I learned of years of being self-employed is I totally respect time. I respect people's time. So if anybody has to leave or anything, it's just a little after 9. Feel free to stay as long as you like. Obviously, she's going to be here for a while to answer any kind of Q&A.
It's a little after 8.
Is there? Oh, sorry, I might be still on Dominican time. It's clearly not the Dominican, although the weather's nice. But the point being, if you guys will leave or something, I take absolutely no disrespect, whatever, because I totally respect your time. I've said before, thank you very much for being here. It's good. It's been great info so far. So far, she saved like at least $4,000. I think I mentioned in my video that I sent this to you guys last week. My folks paid $400 in land transfer tax. You know, under 400, not a big deal, but you know, it's quite a bit of money for first-time home buyers. They're pretty young too. So, I'm the realtor. I've done this for many years. I have several different presentations that I've done. For the past year and a half, it's been exactly the same presentation, except I've updated. Why? It's because I get the same questions every single time. This morning at 10, I'm out talking to neighbors and homeowners. Same questions about the market that I keep getting for the past year and a half. When I talk to home buyers, exactly the same process. So, they want to know what the heck happened in the market, what's the market doing now, and the home buyer, the first-time home buyer specifically want to know what's the home buying process. Some don't even know to ask that, and later on they come after a seminar, holy crap, Andrew, I didn't know this and this actually happens. I had somebody come up to me, didn't realize they needed an inspection, they're halfway through a conditional period. They have no idea what they're doing. I don't know who they're working with, they clearly don't know their stuff. So, information's good, I think I mentioned in my video. This stuff is very, very high. Some of the stuff you guys have never seen before, I guarantee you. So, anyway, I'm not going to build it up a little too much. GTA market over the past couple of years, what the blank happened. So perspective, 2 perspectives on the market. You'd be surprised how much this market, financial markets, all kinds of stuff is not just black and white numbers. A lot of it is psychological. It's astounding what the public can actually move and what the government can move. So we'll see this. What actually happened, and of course the dramatic exaggerated version that gets a lot of clicks and reads. So, Next, the 3 points to remember. I don't need you guys to memorize numbers or anything like that. I want you guys to get an overall view of where the market is. So before it's over, you might forget some of these numbers, but you'll know, hey, this is actually pretty good. I'll show you what. 20,000 active listings in the GTA, properties that are on the market right now available. 20,000 means a balanced market. You ever see numbers or anything, sales, there's so many active listings as a balanced market. Get down to 14, 15, that becomes a seller's market. Lower than that, super seller's market. Means good for sellers, horrible for buyers, like 2017. Over 24, 25,000, buyer's market. Sellers have their stuff sitting on the market, they become desperate, buyers have the upper hand. 20,000, balanced. Right now we're actually right about 20,000, so pretty balanced market right now, by the way. Trevor Realtors sell between 90 to 100,000 properties. I shouldn't say homes, properties, condos, homes, annually on average. So that's a little bit lower, 2016, quite a bit higher, but that's about the average. If you ever see numbers lower, always consider that the numbers they usually show are MLS, TREB, Toronto Real Estate Board. They're not showing pre-construction condos. And if you've ever been downtown, at least in the past week or so, you might have seen a few thousand. So that's the number. That's the actual number. So TREB history, almost 100 years, shows regular repeating market cycles. Everybody freaked out about 2017. They forgot about 89 to 90, 91. Same thing happened every 20 to 25 years. It doesn't. It's a natural market. That's what happened in 2013 to 14, which is next. Around 13, 14, seller's market began to change. Market was fairly normal. It started to shift a little bit towards the seller, towards an advantage of the seller. 15 to 16 is when it really started to heat up. I don't know if you guys followed this. This is when a lot of the stuff in the media and stuff started kicking up. People started talking about real estate because it's getting exciting. Because whenever something bad possibly happens, that's when people like clicking on the newspaper articles. Inventory had a hard time keeping up with demand. Demand in the GTA is always high. I have investors from London, UK, not Ontario. I have investors from overseas. They say this market is the same as some of these big cities. Shouldn't be surprised. Demand in the GTA is always high. Prices were going up as supply and demand wasn't balanced. Supply and demand, you guys don't understand how the free market works. Because they're used to play, regardless of what happens. Appreciation was double digit in all areas heading into 2016. I was looking at places like in Oshawa, sexy place, right? Oshawa, very sexy. There were year over year, 16 to 17, 15 to 16, there were properties in areas of Oshawa that were 30+% annual appreciation. 30%. It sounds like a scam, but it's the real deal. So, 16 to 17. The start of 2016 was similar to 2015, but now more and more negative press and government scrutiny. Whenever this kind of thing, the government always wants to look like they're really doing something good. And so they try to get more and more involved. She was talking about the stress test, I'll mention that shortly. So government's more and more getting involved, and there's a lot more negative press because again, that's how we sell newspapers. Well, in this case, articles. Newspapers are going down in sales. Market became more and more of a topic of conversation, more so than even normal. Real estate's always a topic of conversation, just watch TV. Due to incredible price increases, everyone was talking about. Fall of 2016 sees the new stress test. This one before, it was a new mortgage test. It all came to a head at the end of 2016. I'm going to show you something. I got the straight from CMHC. It was a thing last year. I was probably the only realtor there. Were you guys there?
Last year, no.
It was in Mississauga. Anyway,
I wasn't.
it was a broker thing. I show up because I'm there. I know a guy. Anyway, so this is it. Consumer psychology resetting by late 2016. Look at this. This is very interesting for anything at all, if you know anything about online. So this is Google clicks, this is search engine clicks, negative, bubble bursting, market crashing, those kinds of things. Okay, look, 2000 to 2012. Okay, ups and down, up and down. Sometimes a little more negative, more positive, Oh, the big spike in 2012. Look at 2016, the very end. Skyrocketed. Everybody was talking about the market. Everybody was clicking on the market. Everybody's talking about how crazy the market is and how bad the market is. Market crash, bubble bursting, all that other stuff. All the usual terms that you would hear. Look at the difference. Here's one aspect of that. I thought this was very, very interesting. Stole it from CMHC again. So this is a survey done by CMHC to a lot of buyers. Many respondents believe foreign buyers impact prices. So the question was, what is the main reason why the Toronto prices are so friggin' high? They didn't say friggin'. First of all, city's attractive. That's a given. Okay, we'll give them that. That's fine. The second on the list, in terms of overall people, what people thought was the biggest deal, foreign investment. That was their typo. That's not me. CMHC got that wrong. So foreign investment. Over half of the people surveyed thought foreign investment was a big deal, that's what skyrocketed. Those Chinese, those Russians, those Indians are skyrocketing the prices. Here's the actual truth. Forget Vancouver. Vancouver's all nuts. Toronto, the red. On average, the ownership of non-residents is 3.4, and that's non-residents, meaning that some guy from Scandinavia coming here for a 2-year contract for some company says, well, why should I rent the place? Maybe I might as well just buy a condo. I'm working here. You understand what I'm saying? So the perception was huge. The reality, quite tiny. And obviously those apartments are higher because they're easier investors. The point being, the psychology of people was very different than reality. And that still happens to this day, which is why it's very important to know what actually is happening, the actual numbers in the market. So, 2017, presenter already kind of covered some of the stuff. Year started with a record low inventory, about 4,000 active listings. Balance market's 20. Average January started around 8, 9. It's less than half of a normal. This is the lowest inventory on record, 2017. Demand was huge, inventory couldn't keep up. I was dealing with buyers in this time, it was crazy, absolutely crazy. 8, 10, 12 offers at a time. Overly emotional buyers, not mine, I can prove that. Remember the negative press I was mentioning to you guys? And greedy sellers equals crazy price increases, especially in North Toronto. North of the 401 really took a whooping. And north of Steeles into York region, oh sweet heavens. Markham,
Oh yeah.
Richmond Hill, oh man.
I live in York region. It was crazy.
Yeah, people,
Crazy.
there were actually people, not a lot, but there were some people walking away from their home because they bought it in April for 1.5 million. And by June, when they were supposed to move in, it's worth like 1.2 to 1.3. So losing either 200,000 or maybe a $50,000 or $75,000 deposit. What would you decide? You forget the deposit, you go your way, and hope you don't get sued. Year was front loaded. It was crazy sales. The volume of sales was really crazy in 2017. So the first half of the year had more than the second half of the year, which is what crazy means. Start of April, January, February, March, April. Start of April, market begins to naturally shift. Around the 10th to the 14th of April, the government starts to step in. Oh, we're going to get involved. We're slowing things down. Like, duh, the market's already changing naturally. But no, you got to step in because you got to look good. A balanced market by beginning of June. Went from 4,000 in January, crazy utter madness by June, the same year, balanced market. That's what happened. That was the correction. Quick listen to history. It never corrects twice in a row. There's always a big thing in between the corrections, which is why you'll never see a correction happen right away. So 2018, last year started with a very normal inventory, 2.5 times that of 2017. 4,000, this is about 9,000 or so, 9 to 10. Spring market started a couple of weeks early, that's it. It was normal. Blah, 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 normal. The word normal. That's the reality. What were they saying? Again, just to get a perception, I want you guys to have a proper perspective on this, because this is what you want if you're a buyer. What did you hear about 2018? This is actually articles upon articles upon articles. 2017 had 92,000 sales, 2018 had 77,000 sales. Huge sales drop, market crashing, horrible things, and we're getting huge drop in sales, housing market in deep trouble. What's the actual thing that happened? How do you explain that number difference? First quarter of 2017 had 25,000 sales. Insane, way too high, not normal. You compare anything to not normal, it's not going to look normal. First quarter of 2018 had 15,000 sales. It's a $10,000 sale difference. Okay, let's watch where that goes. Fall of 20, so that's one. This is 15,000 difference, that's 10,000 right there. 10,000 just because of the front, it was so crazy front loaded. That explains 10. We gotta find 5 more. Fall of 2017 had a mortgage rule change, taking effect in January of 2018. That's what she was talking about. So what happened? It's a stress test. You're approved in, I don't know, October, November. You wanna buy a house for, I don't know, 700,000. Stress test is gonna come in January. You're gonna be down to what? Maybe 500 grand, $550,000? You wanna wait till then to lose all that buying power, or are you gonna buy beforehand? Exactly, you're going to buy as soon as possible before the rules take effect. So that's the extra, about 5,000 extra sales then. 5,000, 10,000, that explains the difference. Was it crazy? No, it's fine. 2018 was a fine year. Lower in sales than 2016, well, it's pretty normal. 2019, what's the point of me babbling on about this? Good news, it's a normal market. Just like 2018, but even better for buyers. Inventory is good. Sales are normal. January, normal number of sales, literally. I think it was like 25 sales off of the exact normal. February, same thing. March, the same thing. April, May, June, so far. It's boringly normal. Which is why, oddly enough, if you go online now, if you look at newspaper now, there's not a whole lot talking about it. They'll say something about the future. It's gonna collapse and fall in the future, but now it seems to be okay. A soft recovery, soft landing. These words that people said using that. They weren't using that a year ago, and it was the same thing.
Negative sells, right?
Oh, yeah. It's fine. Sellers will sell if they're realistic. Still happening. Buyers will have a choice and the ability to negotiate. I don't think you realize, obviously, if you're first-time home buyers, you don't realize this. The ability to negotiate, the ability to have an inspection, that's a big deal. We weren't having that in 2017. You just hope for the best in 2017. Here's what I want you to have. I want you guys to feel more and more comfortable with the market. I'll show you this. If you can't see this, maybe you guys can see this. These are the actual numbers. Don't look at 1973, average sales price, $40,000. My car, never mind the monthly payment, way more than that. Thank you very much. There's nothing wrong with $1,000 a month, by the way. different subject. Okay, so look, just look recently. 14, average price, overall average price. It's not a good number, but it's average. It's a number.
Andrew, don't say that. You're making my life difficult and yours too, okay? Don't spend $1,000 a month on a car,
Don't
guys.
tell me right. 566,000. 2016. 2015, 622. Notice the increase? 2016, 729. Forget 2017. Forget it. It didn't exist. It never happened. Blah, 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 blah. It's 822. Forget it. But look at the difference between 16 and 18. 729, 787. Well, look at that. Still a good investment. And 2019, it'd be a little bit higher than that as well. The point being, one crazy blip, which went up, by the way, not down. It went down the same year, but on average, we're still ahead. We're ahead of 2016. And this year we're going to be ahead of 2018, because that's the way the numbers are. I've seen all the numbers in the past few months. The point being, market's going up, not crazy, single-digit appreciation. The average in the past 30-plus years in the GTA has been about 5%. That's pretty normal. Is the market going to crash? Should you wait for the market, for the prices to drop? I would, because I see no reason why it would. Inventory's not there. It's going up. It's not going up a lot. It's going up normal. Same thing. Delete this out of your memory. Same thing. It's the same numbers, just on a graph. The point being, it's still doing it. It's still doing the same thing. If you can buy, if you can get into the market in some fashion, not straining yourself too far, and you'll find that out with the pre-approval, it's a great time to buy. The second thing to discuss, which has no segue whatsoever, so Dr. Zoidberg's telling me my segue is bad, so I should feel bad. I do feel bad. It has nothing to do with the market specifically. Is the home buying process. Before I get to that, do you guys have any questions? You guys, did I speak too fast? You guys covered that okay?
No, that's great.
Fabulous. Okay. Smile so far. The next part might sound almost too simple for some of you. Again, I get the same questions from people at the seminar sometimes. You get like, that's trademarked.
Taking pictures of you
Oh, okay, thanks.
for social media.
Sweet heavens. It's like my second video today. Never mind. All right, look. Steps to buying a home with me. I only put me in there, not to he. This is what I do. In fact, whoever, if you've got a cousin who's a realtor, maybe I know a shot there, whatever. But this is what they should do. So tell your cousin this. Maybe take a picture for him or her. This is post Joe. This is post Joe. Joe being the name of whatever independent broker I'm working with. In this case, Rosanna. In which case, this is who you go to first. Today, I followed up with last week's seminar. The first thing people were talking to me when I was talking, hey, it's Andrew, how are things going? Oh yeah, Andrew, we're working on that pre-approval. Yeah, I have an appointment coming up. Why? Because I kept harping on the pre-approval. Pre-approval first. It's the first step. So guys, please make sure you get that. This is post pre-approval. Okay. We meet up. We get criteria, wants, needs. Needs are very important, by the way. Wants are secondary. You guys should know the difference. It's very important to know that. Financing, timeline, etc. I want to know everything that you need to know and that you can tell me about what you want to do. Timelines are important, especially for me, depending on how the market is. Financing is very important. In the GTA, unfortunately, financing is first. If you go to the US, different cities and such, you don't talk about financing necessarily first. You can say, well, I want to live in this area, I want to do that. Not in the GTA. The GTA is first, how much? And then that number tells you, okay, you can go to Oshawa or you can go to North Toronto. Big difference. Very, very important. Unfortunately, that's the first thing we talk about. Once financing is done, I do something called buyer education. Rosanna already talked about this very briefly. All buyer education is as simple as it sounds, people don't do it. Once we know exactly how much the price range is and kind of what you're looking for, we go actually see physically properties. We see some properties in your price range. Often I get to pick them out. Sometimes you get to pick them up. Not many, 4 to 6. You want to see properties that are slightly different. If you're absolutely dead set on a bungalow, I want to throw in a side split. I want to throw 1.5. I want to throw maybe even a townhome. Just as an idea, I want you to go inside, physically see it, what it feels like. That way you can say absolutely, positively, no, I don't want to do this. Or, you know what, this is actually an option. The other reason is, when we list a property, I just did it today, I did photography on a condo earlier today. We use wide lens cameras. We want the condo, the place, the home, the room to look the best it possibly can. They're like prom pictures. In prom pictures, there's no acne. Nobody's got bad skin. Everyone's hair is perfect. Same with the properties that we take pictures of. Sometimes a wide lens camera makes the room look bigger. That's not the intent, by the way. It's not lying to you. But you go into a house and go, holy crap, I didn't realize this kitchen was this small. It looked big on the picture. Now you know. You do it once or twice, you already know what you look like, what the place looks like when you look at it online. Very important. It's amazing how many people don't do this. It's maybe one time out for 4 to 6 homes. It'll save you countless hours of looking at crap that has nothing to do with your interests whatsoever. So that's the first thing we do. Then we know exactly, at that point, after this, we'll know exactly what it is that you want. Exactly. Then we wait and see. And the only thing I would say, even in this market, things don't necessarily fly off the shelf, depending what area. Out in Durham, maybe sitting for 2, 3, 4 weeks. Bloor West, I worked there quite a bit. This thing might still fly in a week or so. Point being, when you see something you like, you want to make time to go see it. It's important. You know, it's your next place. It's probably your biggest investment so far, more than likely. For your family, whatever, it's a big deal. You want to make time for it. So that's the next thing. The next thing, when we see the one, here's when you want to make sure that you actually know everything. What we're going to do is going to discuss the area, street, building, sold prices, everything else. You want to know what the price is of that kind of property. You want to be completely comfortable with whatever it is. If you want to put an offer, you want to know how much money you need to put in. We make the actual offer. The offer usually has some, we negotiate back and forth and say the offer gets accepted. Usually there are conditions. Rosanna mentioned the condition, two conditions that are most popular. Financing, very important, especially first-time home buyer, and you've got the inspection. Depends on the kind of property. Condos, maybe you don't inspect. Most homes you'll want to inspect, especially detached properties. You don't have an inspection. If it's a condo, you may also have a status review, which your lawyer will do. That's important because, God forbid, that condo corporation has a lawsuit against it. Somebody slipped and fell the last year, they got $2 million lawsuit against it. Maybe the cleaners are upset and they're on strike. Who knows? You don't know that. You check the status review. Lawyer does it, not the lawyer, their assistant does it in half an hour. So it got to be done. Next, after we put in the offer and it's actually accepted, there's a conditional period. Here's something important. Maybe you know, maybe you don't. A lot of people don't. Within 24 hours of an accepted offer, like it's a done deal, we're good to go. As the conditions start, within 24 hours of the acceptance of an offer, you have to make a deposit. The deposit will be in your probably 1 to 4% of the value of the home. 5,000, 10,000, 20,000, whatever it is. Here's why I tell you this. Some people don't have this kind of cash lying around. And if they don't know this, holy crap, I got 24 hours to find 10 grand somewhere. What if you don't have it ready? What if you don't have it around? It's possible to actually lose the deal. What if another buyer comes in later and says, hey, listen, I'll pay double that. Or not double, but say I'll pay an extra $5,000, $10,000, give it to me. Well, no, I got a contract. But if the deposit doesn't come in within 24 hours, it's not a contract. If you guys don't know that, you have to make sure that you have it. So that there's a deposit within 24 hours, usually. I can change that sometimes depending on what your situation is like, but that's the norm. Then financing gets firmed up. Say the inspection is done, usually $350 to $500, and say that goes well. If it's a condo, status certificate is reviewed. Assuming all goes well. If it doesn't, we do a mutual release, you get all your money back within 10 business days. So that deposit that you gave, it comes back exactly without any deduction within 10 business days. Usually sooner because nobody wants to hold on to your money and get sued or look bad. Assume that all goes well. Deal is now firm, the status is sold firm, it's your place. It's your home, it's your condo, you just haven't moved into it yet. You're just waiting for the closing date. We do a couple of visits prior to closing. We sign the mortgage papers, sorry. A few days before closing, meet with the lawyer and sign.
Sign the mortgage papers with Ro, not Joe.
With Roseanne. In fact, yeah, Roseanne will tell you that the mortgage papers, but that thick, they're huge. My offer is like 4 or 5 pages. FYI. That's the way it is. But again, she mentioned about the insurance and that kind of stuff. You want to make sure don't take that off. Get insurance from somebody else. She'll tell you how to do that. Closing day. I'm on speed dial, but I'm not going to call you. I'm going to disappear unless you need me because I don't want to be a part of the stress and madness that sometimes like a closing day can be. However, in all honesty, it should not be. It's a matter of just moving your stuff. Everything else has already been done. You already met with your lawyer. Everything's fine. Everything's signed. And a couple of days later, I follow up to make sure that the stainless steel appliances are in fact still stainless steel and not those green ones from the 70s that they accidentally left and took the other ones with them when they left. The point of knowing the process is very important. And you probably heard this, Rob, and I steal this from him, it's a business coach. When you're looking for a house, you're happy and you're ecstatic. So seriously, did I waste my time telling you this? When you're looking for a house, you're very happy. Looking for a realtor is usually on the top 10 list of most enjoyable things. Marriage is on there, wonderful, having a child is on there, and looking for homes is on there. Once you see the one, the house that you actually like, you go into a different list. Marriage is not on the list. Divorce is on that list. Death is on that list. Public speaking is on that list. And buying a home is on that list. The most stressful things in life. When you go from one list to the other, and think about, holy crap, I just signed I have a $500,000 mortgage, I have a $750,000 mortgage, how did I do this? At that point, you don't want to be asking me questions about, oh, the deposit, what's that? Or the inspection, what are you talking about? No, you want to be in that position and already know everything that you need to know about the home buying process. That is why, I'll give you an example, just the past 2 or 3 clients, past few months that I've had. One thing they said, it wasn't boring, it was still kind of exciting, but it was a smooth transition from beginning to end. There's nothing really crazy. They don't know what me and Roseanne are doing behind the scenes, making sure everything fits right. But for you guys, for the buyer, the point is being, it should be an enjoyable process, and it should be an enjoyable process. How you make it enjoyable and maintain the joy is you know everything that's going to happen. Once a knowledgeable buyer for us is one of the best things ever, and for you guys, when I think of this kind of information, I think, what would I want to know? I want someone that I love, like a family member, to know if they're going to buy a house. You just heard it, and you heard it from Roseanne. So, that said, any questions?
I have a couple too.
Yeah, hit me. Go ahead.
So first one, when you're buying a new build, whether a condo or a house, you don't do an inspection.
When you do a new build, there's usually a kind of an automatic inspection that is done. The date is probably a little before occupation,
Okay.
but they'll actually do an inspection. They'll have somebody walk you through. Sometimes the builder will take care of it. Actually walk you through, make sure that everything that you paid for is actually there. Your appliances are the kind of appliances, the upgrades you paid for are actually in there. That's condos, they tend to have those. There is such a thing, the timing's kind of blurry for me, it depends on the builder. With homes, with buying a pre-construction home, like a detached home, whatever, 4-bedroom, there are inspectors who will actually do it for you. So you may have to get an inspection. I would recommend doing it.
Okay.
There are those, I actually know one or two that actually do a lot of brand new home inspection. Because you think, new home, nothing's wrong. No. There are all kinds of issues. They'll find stuff that the builders do because they can get away with it. They'll find stuff that you'll forget. And it becomes more of unless it's something major, it becomes more like a checklist that you can literally give to the builder. Okay, these are the handles, this door doesn't even open, these pipes are in the wrong position, you got the exhaust below this, that, the other. Yeah.
Right. Okay.
To briefly answer, yeah.
And the banks would still ask for an appraisal the same way they would for an older house.
Depends on depends on how long the construction. Do you know if they do it before or after?
For a new build, I don't think they do, but I haven't done mortgages actually yet for a new build. I can look
Okay.
into it though for you.
Yeah, Rosanna can definitely look into
Yeah, I
it.
can look into that for sure.
Appraisals hard, but if you consider it, say it's a condo, you're buying now, it's going to be built in 2022.
Right.
How are you going to appraise it?
Right.
You know what I'm saying? So they may appraise it towards the end. Sometimes there are pre-approvals that are very long. Sometimes there aren't, and you kind of hope for the best. But at the same time, the price. I mean, in terms of a condo, for example, how is the appraisal going to go wrong?
Right.
Yeah,
You know
so
what I'm saying?
typically with builders, when they're asking you for a pre-approval and the project is gonna be done in 2 or 3 years, they're asking you just to make sure at this particular moment that you can afford the property you were purchasing, because they need to start building, right? But they understand that in 2 or 3 years, things can change, you may have lost your job, you're gonna have to get a pre-approval at that time as well,
Okay.
right? This is just to commence.
One
at this
asterisk to
particular
that,
time.
that's actually really important,
Yeah.
is if you do get one of those kind of properties, ideally get something that you can assign. Quite often, if you got a like a VIP broker or somebody who
Right.
I get offers like this in my email regularly. You know,
Yeah.
one of the incentives, you get a free dishwasher upgrade, or
Yeah.
blah blah blah. One of them is a free assignment. Now, so even if it's not free, it's still worthwhile assigning. Meaning that if you find that it's a year, 6 months before the actual occupation, and God forbid something happened with your job, or maybe you got hurt, or you lost your job, whatever,
Right.
you can't do it. At least you can assign it to someone. Now
Right.
that takes work too. You want to almost you can't put it on MLS, but you want to put it out to brokers, other
Right.
buyers. But you want to make sure you have that option.
Okay. Now that takes me to the last question I had was, if you are going through that route where they already have like a payment plan or whatever for the down payment, like say some of them will say whatever, pay 5% and then $1,000 a month for a year or whatever it is.
Yeah.
And that goes towards your down payment. You wouldn't go through lending the same way we would with you if it was in a traditional.
Yeah,
Property
that
or-
would go towards your down payment, but I would still need to prove to a bank that there is a form of down payment.
Okay, so you would still work with a mortgage broker
yeah.
on that.
Well, absolutely,
Yeah.
especially
So-
independent, because you want somebody who stays kind of on you to make sure
Yeah.
everything's right,
Right.
and adjust your file accordingly.
And we
Okay.
have the company, Capital Lending Center, just developed a program specifically for us to help our clients in situations like that, because we'll get the purchase agreement and it'll tell us when your deposits need to be made.
Okay.
You guys get automatic emails. As soon as I get all that information, I plug it into your file. Everyone is kept up to date. Andrew will know, client needs to make because sometimes you can find a pre-construction with your realtor.
Okay.
I'll say Andrew, like he'll get an email, Andrew, Matthew's gotta make a $10,000 payment tomorrow for his deposit, call him. I'll call you as well,
We'll make
right?
sure.
We'll make sure that everyone knows what's going on.
Capital
and
Lending works with a lot of realtors that do a lot of just pre-construction. I've
Yeah.
done pre-construction, I've done resale as well. There's some that just do pre-construction.
Yeah.
Point being, they do go through a lot of them, so they know the hurdles.
Yeah,
And it's important to kind of stay on top of it.
yeah, and the system that the company developed was done with realtors, and it was a lot of like, what do you want to see, question and answers, what do our clients need, what do you think your clients need? So all of, like, I mean, it's in the works, like we're using it, there's little test things that here and there, but it's an amazing, like everything, I get notices every morning in my email, this is what you need to do today, and I don't even have to
Because
set them
life
up
gets
for
busy
myself.
in all kinds of
It's
different
like it
ways.
does it automatically for me, right? And when you get busy, those little reminders help a lot, right? So
Yeah.
I mean, there's value in everything that we do and we try to bring to our clients. And I stay on my clients even after closing. You'll get a notification a year after you're closing. Hey, how's everything going? This is what and everyone is kept in the loop. Like Andrew will get an email, hey, client has been in the mortgage for a year. Give him a call, see how he's doing, right? Like just little things, because people get busy. It's just little reminders.
Plus life changes. What if you have a property, you got a 5-year mortgage, but you got to get something big. Your wife has triplets or something. Well, you got to get another place. Ask Rosanna, are we close to the renewal? Is it worth renewing now? What if we renew now, 2 years later? What's the penalty for breaking this?
Yeah.
Those kinds of things. The thing about an independent broker, I always vouch for these guys. One of the reasons is that before they even start, they get at least a vague idea of what your life is like. Again, is your wife having triplets? So maybe that 1+1 condo that you're buying, in 2 years that might not be big enough for you guys, and 5 of you. So therefore, you might want to get a product from a lender that not only has a good rate, but also has the minimal kind of penalty for changing. Or it's an assumable mortgage, where you can take it and move it, or assume it, or it's a portable mortgage. You take the mortgage and move it to another property. If you don't have that, if you're stuck, you might be paying a very large penalty. Why? But you would have known in advance. Rosanna would have told you, don't do it.
I find people get fixated on rate, and yes, rate is very important, but it's not the be-all and end-all of mortgage. Because if I put you in a rate of say 2.89, but it's going to cost you $30,000 to break, versus a rate of 3.09, and it's going to cost you $10,000 or $5,000 to break, takes the extra monthly payment, right? And especially if you think in 2 or 3 years you're going to need to break your mortgage, right?
Big,
like you
I've been there,
you gotta think of
very
overall
important.
cost of borrowing, not just the immediate monthly payment. What is my rate?
Yeah.
But that's where we come in. Right? Because I can take it to different lenders. I don't just work with TD and can only sell you TD product. Right? I don't just work with Scotia. I don't just work with NCAP or Equitable Bank.
But at the end of the day, the rate we would have is the same that if let's say we went through and you got some with TD, what I would have got from TD straight.
Not always. I often beat TD and Scotia with TD and Scotia.
Okay.
Because it's not, what's interesting, like the market psychology, underwriting is not black and white.
Yeah.
It's these are the numbers plus Rosanna's story about you.
Yeah.
Oh, your credit sucks, but you know what? Because your cousin screwed you over, and your company's about to go and do an IPO. You're going to be a multimillionaire. Maybe you're okay to take this mortgage. You know what I'm saying? Honestly, there's always a story in these people. Because underwriters are human beings who listen to things, and you're a human being, not just a number. So you have a file about you. Rosanna can take that file and say, okay, this is why this is it. This is why this is the case. This is what he's doing. Then we're like, okay, that totally makes sense. I would have known that had she not told it.
Yeah. And this
That
is why I
happens
have
all the
my
time.
team. We know how to place deals.
Same with TD and Scotia. If they know underwriters there, which they do, capital lending do, yeah, they have a story to tell somebody. And those underwriters are like, oh, okay, yeah, I know this guy. He always has good clients, and I see this story now. This makes sense. Okay, I'll be more lenient.
Yeah, I've had clients
Happens all
come
the
to me. I've been pre-approved with Scotia for 3.09. Okay, well I can get you a mortgage at 2.9.
They never give you the best rate right away, ever.
At the end of the day, I'm not trying to bash big banks because we work with them. My thing is, a lot of people have loyalty to their bank. Their banks don't have loyalty to them. They don't care.
Yep.
My wife learned that. She's so
I've been with
years ago.
CIBC since I had a child's account that my parents opened for me. I'm 33 years old. I don't have a mortgage with CIBC. I have a mortgage with Street Capital.
And they're still making
Right?
billions of dollars, so they're okay.
They're not, yeah.
Despite Rosanna's
don't-
business.
They don't have a loyalty. I'm being completely honest. When I went to CIBC for a mortgage, oh no, this is going to be your rate. I got this same mortgage product for much less, and I've been with them for 33 years.
Some of these lenders are actually arm's length owned. There's a great mortgage lender, Merrick's, owned by RBC, or arm's length RBC. The First National, who's got the First National? I forget, it's one of the big banks.
Yeah,
They're competitors, but one actually owns the other, but they're arm's length. The other one doesn't have a building, but they give you all the best products. Some of them have warranties about appliances and stuff. Sure,
Yeah,
no,
and
seriously,
that's
there's some really
that's
good
how
stuff
they,
out there.
yeah, that's how they pass along discounts. A lot of these trust companies, credit unions, because they don't have actual branches that you're paying for.
Their costs are way
Their
down.
costs are lower, so they can pass on the savings to clients. Clients don't know that though, because
And they don't advertise as much these
Yeah.
lenders.
right?
Saves money for
Clients
them.
don't know that. They think, oh, you go to a bank to get your mortgage. No, not always. Right?
Sorry to ask this question.
Yeah.
As you said, differentiating between mortgage agent and broker. You said that we are not going to pay you.
Yes.
You get paid by the lender.
Yes.
Does that no rate that we get on a mortgage, does it affect, sorry to ask you, but
What we get paid?
yeah, exactly.
It does not.
It doesn't affect
So
it.
the lenders are smart in the sense that they know there are some shitty mortgage brokers or agents. I'm not gonna lie. They know if a lender pays them a little bit more, that's where they're taking all their deals because they're getting more commission. Lenders aren't stupid. Our rate of pay is always the same. they made it very streamlined, so no one's getting better business than someone else.
Is that like a regulated thing? Like that's
Yeah.
how it is?
Yeah.
Especially if it's one of the biggies, like First National, National Bank,
Yeah, they
Merrick's, those kinds of things.
they
They're
stop
huge
that kind of
companies.
behavior, right? Like it's so, every once in a while a lender will give us a promo or say or whatever, but if your deal doesn't fit there and if it's not what's best for you, I'm not gonna bring it there. Like I'm not concerned about making an extra $100 just to say, because I'd rather you coming back to me in 5 years when your mortgage is up for renewal.
It's very bad for business.
Right? Like it is
For myself as well, very bad
Yeah.
for business.
I don't
Make an extra
I don't do
$100, lose 10 grand next
Yeah,
month
like,
after.
how does that make
No,
sense?
No thanks.
right? I'd rather have you guys be happy, refer me friends, other family members, and you guys come back to me. That's what I want.
And you'll
I
know,
don't-
if you have to pay anything, you always ask questions. It has happened sometimes.
It does.
Be lender, somebody's in some big trouble, we have to go to some lender somewhere, that kind of thing,
Yeah.
that does happen. For normal people, no, for some buyers,
Yeah, so I'm not gonna say we never charge the client, but typically if you're on the A side, good credit, good down payment, good income, there's never a fee. B lenders, we may have to charge a fee, right? Because the brokerage will require us to charge a fee. Privates, we always charge a fee because we have to get paid. Privates won't pay us out of their own pocket, we have to charge a fee.
and
Right.
if you're there, you're probably not a first time buyer.
Yeah,
Probably
right,
third,
so
fourth, fifth property, those kind of things.
yeah, it makes a difference. So I know, like, I've only ever had to charge someone on a B because, again, like, the mortgage amount was significantly low. And obviously, company needs to make some money too, so we have to charge a fee in certain instances, but in most, I don't. Like,
For some buyers, I don't think you'd ever see.
yeah. Like, I don't, one of my clients came from another broker who was charging him $5,000 on top of what the bank was charging him. And I'm like, for what?
I've seen some crazy stuff,
Right? And
even this year.
I
Even
didn't charge
this
him because the bank is paying me, so what am I charging you for?
Mm.
Right? So I mean, it
Another
depends on the people.
One more question. Is there a high season in the purchasing prices? For example,
High season.
For example, in some months or seasons of the year, the prices would rise, and some month of the year, the prices would
Not really. It's price is very difficult. I'll tell you why. Like for example,
Does it have a pattern or something like that?
it has a pattern in terms of overall sales. The spring market starting a little bit after Valentine's Day, ending approximately beginning of June. That's the busiest time of the year. So more inventory, more people put their house on the market. It's a busy time, spring market. We want to go there. We want to get the house sold by the end of summer, move the kids, and at the end of the summer, move the kids to different school. Here's the thing. Everybody always has the same great idea. So the sellers put a lot of inventory in the market in the spring, and the buyers are also more active in the spring. So you have, on the buy side, you have more competition. On the sell side, you have more competition as well. So sales-wise, the sales in spring are much higher than, say, summer. But in terms of price, on the buy side, it's very difficult to say. I will say two things that I've found over the past few years. The summer is a good time to buy because the sellers that are on the market, I know because I know a lot of them, are actually wanting to sell. They're not playing around. The spring sometimes they'll test the market. Maybe I can get this much money. We'll see how much interest he gets. In the summer, they're not testing the market. In the summer, they actually want to sell most of the time. Buyers, on the other hand, I tell sellers this. Buyers, if you're buying in the summer, it means you're not doing about summer stuff. You're not hanging out with your family necessarily as much as you would like in the summer. It means you're serious and you actually want to buy. So the summer and the holidays, Christmas time, around that time, when the weather's not that great, actually good times to buy. Because, same reason, you're serious, the seller's on the market around Christmas time, maybe they come off for a few days when they're back on, they're serious, they're not playing around. So you're not a tire kicker, and the seller's serious. You get a good deal that way. In the springtime, possibly you get a good deal, you could act fast, definitely have to be pre-approved, no question about it. In fact, it should be that way anyway. But in terms of price, honestly, it's hard to tell. Here's the thing, it also depends on what area you're buying in your price range. Say your price range are up to $1 million. That'd be wonderful for some home buyer. I'd be very happy with you. But here's the thing. Out in Durham, Pickering, Whitby, fantastic. Scarborough, okay, not bad. But in downtown Toronto, Bloor West, I use that as an example, one because it's always free and busy. Ronceville, on the west side, High Park. If there's not much on the market and you want to buy something, you're going to have competition. You may have 2 or 3 other people bidding on you. But if you're buying at a time when there's a lot of inventory, the next week, you might not have as much competition, you don't have to go up ahead in price. So I wouldn't say so much, to be quite honest, that there is a specific time that the prices are better or not. There are times where we have more or less competition, which may possibly, depending on the situation, the area, and the seller, give you a better chance to get a better price. But in the GTA, because it's always active, it's not like some places. We sell more in a month than some cities sell in a year,
Yeah.
even on a slow month, seriously. So with that in mind, what I would say is go with your lifestyle, go when you actually need it. I have to move in 3 months, okay, fine, let's do it in 3 months. Forget with a business, let's just get our best deal at that time. market's always active. Take advantage whenever you can. Make it fit you, and then we'll adjust according to the market. Hope that's of some help.
And remember, guys, our goal is to get you into a property that you can afford, okay?
That you like.
That you can afford, that you can keep, and we'll give you possibilities for potential investments. We'll look at things after year 3 of your mortgage. Maybe you got a little bit of equity, why not pull it out and buy another property if that's an option? And if you can't buy right now for whatever reason, we'll sit with you and say this is what you need to do to get you to where you need to go. Okay, in this length of time, however long it takes depending on your situation. Right, there's always options. I'm never just gonna say, again, like the slide said, I'm never just gonna say no to you and be done.
So if it's not a dream home right off the bat, which is a possibility in GTA, mind you, in all honesty, you never have to fully settle. You have to be realistic, but don't settle. There's stuff out there that you can purchase. Think 2, 3, 4 years down the line. People ask me, how do people buy a $2 million home? Sometimes they're 2 properties away. The first property, the move-up property, and then, God willing, you're making more money, you're being responsible with your credit, you're making more money, maybe your husband, maybe a husband and wife, maybe both spouses are making more money, bonuses, those kind of things, plus the equity in their home, that's how they get the big house.
Yeah.
Equity is a big deal. Remember, you're not only building appreciation, the house is appreciating in value, you're also paying down the mortgage. Those are 2 ways you make money. And you actually do nothing other than pay your bills. That's home ownership, 101.
And keep in mind that you walk into a house, your first home, you're not crazy about the kitchen. There are products out there called purchase plus improvement products. Okay? So what we can do is say, this house needs about $40,000 of work, maybe the kitchen. You just want to upgrade the kitchen. The lender will lend you an additional $40,000 as long as you qualify up to $40,000. The thing is, you will have to pay the renovation fee up front, right? However, we know contractors who are willing to front the reno costs until the bank pays you, so nothing is coming out of pocket. There's always an option.
There's tricks you can use.
Yeah,
With the same rate?
same rate. As
Yeah.
long as you
Same like
qualify,
your mortgage.
yeah, as long as you qualify, so say you're looking at 500, but then you see it property, okay, I'm not crazy about the kitchen, it's probably gonna need $40,000 in work, and I can qualify you for 540,
Perfect.
why not?
Pay minimally to one of the contractors that she knows.
Yeah, the contract.
Or get a Visa card from Home Depot or something.
No, don't do the Home Depot.
No, the Home Depot, which one is it?
Because there's fine print on the bottom that you have to pay that balance off right away or else you get
Don't
charged
do that.
interest. Don't do it, okay?
It
Don't
should-
do
That
it.
was 2 years ago, never mind.
The improvement should be done by specific tradespeople or no?
Yes, they're gonna ask you, so the
gotta be
mortgage,
legit.
yeah, the company, the lender will ask you for quotes. You're gonna have to get someone in there to give you quotes. They'll sign off on it as long as everything makes sense to them. You typically would front the cost up front. Once all the work is done, they'll send an appraiser in to make sure the work is done, that it's at the value that they've lent you. They'll give you the money.
The appraiser's a big deal.
Appraisers are a huge deal.
They need to know that the property you purchased and you fix stuff on is actually appreciated in value according to the money they gave you. Meaning that kitchen, bathrooms, those kind of things.
Yeah.
If you put a super duper deck in the back or something like that,
Yeah,
it's
it
not gonna
has to
take up
be-
the value that much.
It has to be connected to the, like, it can't be something like a hot tub that you can move. It has to be value to the property that's gonna be in the property.
It's gotta make sense for, remember, it's a lender.
Yeah.
You disappear and run off to Mexico, they have to be able to sell the house. Is what you just built gonna give you them an extra 40 grand?
So if they're lending you an additional 40,000, they need to make sure that that property now appraises at 540 instead of 500.
Kitchen, yes. Koi pond, that's
Right? Typically, some will allow for pools, a lot of others won't. But because it's fixed in the property, it's things that aren't fixed that become a problem. Right? But there's always an option. A bank won't tell you that though. Right?
gotta know the little asterisk. Any other questions?
Oh, you guys are amazing. Thank you so much.
Thank you.
Amazing?
You're-
Really?
Yeah, no,
Wow.
This was
That's just a con.
A lot. It's a lot. It's
And
a
we
lot.
have muffins.
Yeah.
There's muffins. That went
It's
amazing.
a lot to digest. It's a lot of information. If at any time you guys have questions, our cards are here. We've sent you emails with our contact information. Give us a call, send us an email. We're never gonna, like I said, we're never gonna say no. It may not be right now, but we'll get you to where you need to be.
Usually when I finish these, the so what is the first thing you want to do. Now, I've actually sold numerous properties to clients that weren't ready on the first seminar. They were 1 or 2 years out. I followed up. I made sure they follow the right plan. Maybe a credit issue, and Roseanne will give you a plan to how to change those kinds of things. Within a few months, you can change your credit if that's an issue. Whatever the reason you're waiting for a while, sometimes you just need more money. That's understandable. It would be beneficial, regardless of where you're at. I'm not pushing it, believe me, but this is just the reality of things. It would be beneficial for you guys to get pre-approved regardless. I'll tell you why. Even if it's just something like a software approval, you're afraid to get your credit checked or something like that, or you know it's bad and you just know up front. Maybe you got checked a few weeks ago for a credit card or something. The point being, you want to have some idea of where you're at now
Starting point.
and what you need to do. For example, right now, some of you guys might be approved for a specific number. Hey, that's actually big enough. But here's your problem: you have no down payment money. You got $5,000 available to you right now. Some other money's coming on later, or maybe you just have to save up money. That's fine. At least you have an idea. The key, honestly, the biggest thing about doing these is knowledge. If you guys know where you're at currently, you wait a year, two, whatever, but at least you know where to start. If you have no idea where you're at currently, you have no idea how much to improve on. I've spoken to people who swore they'd have to rent for the next year or two. They didn't. 6 months or so, they're ready to roll.
Yeah.
Which is
If you
astounding. I've done it.
If you can get into a property and pay it for yourself, not rent it, you're better off. A lot of people have the idea in their head, and only I know this from family experience. So I'm a landlord. I have renters. Okay, so I don't want to downplay rent because I need my tenants, right?
It has its place.
It
No
does.
doubt about
It does for sure. But a lot of people go into renting with unless you're extremely disciplined, it's very difficult to save money when you rent. My aunt has been renting a property for like 40 years. She's always with the intention, I'm going to save, I'm going to save, I'm going to save, I'm going to buy. In 40 years, she's been renting her whole life. And because you get a little bit of extra money in the account, your bank account, oh, we can go on vacation. Oh, I can buy the car that costs me $1,000 a month. Okay?
Get this. You buy a property for $400,000. $400,000. Annually, you pay off how much of a mortgage? $8,000?
Yeah.
Say 8 to 10 grand.
Principal.
Okay, you pay about $8,000 in principal. You've made $8,000 that year. That's how much money you've saved. But the house also appreciated that at 5%. $20,000. Now you've saved in 1 year $28,000. Did you do that while renting? How many people save 28 grand while renting? It's a $400,000 property. That's not a whole lot. That's like a condo, most of Toronto.
Yeah.
Scarborough, not even Scarborough, probably still a condo. Out in Durham, or maybe a Peel, maybe you get like a semi-detached townhouse. Wouldn't be only from 400 grand. I know that's a lot of money, but it's not millions. But even that property, you just saved about $28,000 a year. That's a lot of money. Tax-free, by the way. It's like your house has a job.
I bought a property up north, okay, in Tottenham.
Sweet
So
heavens.
it's pretty far. But when I purchased the property, I paid a little over $300,000 for it. After it was built, it was a new construction. I would say it was probably worth $550,000. So in 2 years, what did I make? And I didn't do anything. Properties are gonna go up. You're gonna make money.
Plus you live in it.
Yeah,
You can't live in
and it's
a
yours.
GIC, but you definitely live in a house.
Yeah, it's yours. It's yours. You're working towards it. You're working for something. Pass it on to family when you have kids, all that type of stuff.
Absolutely. So, we kept you guys long enough. Thank you very much, guys, for coming.
Thank you.
Like I said, first response, get our cards, especially Rosanna's card.
Hold on. The ballots, where'd you put them?
Oh, right here. Crap.
We will mail you, whoever wins, we're gonna pick a name. Whoever wins will get a.
Are you guys okay for the next like 2 minutes, 2-3 minutes? I want to give you
Just
something.
Absolutely.
Are you sure? Okay, because it's almost 9 o'clock. Just put your information real quick, just so we have something to go on. Otherwise, it looks legit. I'll give you a pen if you don't have one. Sharpie. You get it on your hand.
That's all I need.
Yes. As soon as you walked in, I'm like, I don't know from where, but.
You guys got it? No, you didn't.
Actually, we can pick it out right now, the winner.
Absolutely.
And then I'll go.
We'll do the main one. Yeah, it's interesting. The smaller the crowd, the longer it usually goes.
Yeah,
Because we have more Q&A, which is awesome, by the way. That's actually one of the reasons why I like a small crowd
so do
sometimes.
I.
Bigger's good because you get a lot of names and people are interested. You guys
Stretch
have
it
some
up,
really
make
great
it
questions.
really small.
Yeah, we shove it in there.
Really small so I can't see. I'm gonna shuffle it around, pick a name.
We play no favorites.
As long as you pick me up.
Yeah, that's fair. Anyway, as long as it's me.
I'll make it small.
As long as I can't see it, the names or anything in it.
Why would it come to you? What
What are you giving away, Rosanna? Movie?
Yeah.
What do you think?
Movie passes?
That's usually the best.
Good
Movie
movie
passes.
passes?
I love those. Because there's got to be something out there worth watching.
Movie passes, food, coffee. What do you guys want? Tell me and I'll get it.
Yeah.
Whoever the okay, I'll ask the
We're
winner.
not picking.
Whatever you prefer. Oh, you put one in already.
Yeah, nice pens.
These pens are amazing. The MCAT pens are the best pens ever.
I think that's good too.
They write really well.
They land really well too.
Yeah, they do. MCAT loves us, so we're good.
Okay.
Give it a bit. Don't look in the cup.
No, they're all white papers.
Don't look.
You got a pretty good chance, eh? Better than the lottery. It's like, what, 20%?
Just put your hand in.
This guy. Roll up tight. Yeah, so I realize things are legal now. Fabulous. Denise.
There you go.
Sorry, dude. That was an easy one. There's only one here that's possibly Denise.
Denise, what do you prefer?
Awesome. What do you prefer?
Movies, coffee, restaurant.
We can do all three. Well, no, one out of the three.
Or whatever, like I or like a Visa gift card, I don't know.
Sometimes we have it ready because we don't. It's up to you.
Visa card?
Visa card.
Here? Sounds good to me. Awesome. If you can. Take this marvelous.
No.
She's gonna mail it to you.
More than.
Oh my.
Actually, if you don't mind, please.
Yes, we're gonna mail it to you.
Both color. So
All right. You got 30 seconds to get out. Kidding. Guys, thanks for coming.
Great.
Thank you very much.
Pleasure.
We try to have fun with it. Thanks for coming.
Thank you very much.
Pleasure.
Appreciate the
Please.
information.
Oh, anytime. Glad to help, guys.
Nice to meet you.
Whatever you guys do, please feel free to contact us for information.
Any
Got questions?
questions?
Please.
Absolutely. Thank you
Probably
so
do.
much. Thank you so much.
My pleasure. Fabulous, yeah.
Nice to meet you. Yeah. Go down
Thank you guys,
here.
man. You missed a little bit,
Get
but
down to your front
you got
door.
it?
Yes.
Awesome. Please.
You
What's up?
Will there be another one like this segment? I would love my friends.
Seriously? Yeah, we can do another one. Depends on your schedule. I'm pretty open. I like doing these because honestly, it's good info.
Yeah.
I don't even care if they come. But yeah, if your parents want to come, we do these. When that's my next major one I'm doing elsewhere is like September. Did you want to do one later this summer?
Maybe we can do one in August? Maybe
Yeah,
in
like very
August?
beginning. I'm away the middle to the end. How about like the beginning of August?
Yeah, anything.
Yeah.
Whatever you guys are doing.
Yeah, if we do another one in August, or if your parents just wanna sit with us, we can always just do
Yeah,
like
but,
a,
I mean 5 people.
Yeah.
I don't mind.
Yeah.
like we
yeah.
can always do like a one-on-one meeting. So
Bring
we
them,
can
but
answer their
if we
questions.
decide on the time, even the next month or
Yeah.
two, we'll make sure you guys know. And if it's just your parents, that's fine. But maybe we'll get some other folks as well
Yeah.
like this time. Because again, I've had 40 people join before. Sometimes it's a little. Either way, it's good stuff. Are your parents renting?
Yes.
They are here.
Okay, so we can plan for the beginning of August, I think I'm good
Sometime
with
soon
that.
we'll do. Yeah, as long as
Yeah.
you're
I
okay,
think I am.
I can make time and we'll get you guys in. Probably in here again. This is easy to find, not a big deal.
Was it
Yeah,
easy?
yeah.
Cool.
Yeah.
We'll
Sorry
put up
if
some
the
sun.
door was locked, I thought it locked at 8.
Oh,
Yeah, we didn't know.
yeah.
That was a new one.
It's okay.
So
Yeah.
absolutely.
If anything though, I have your card.
Yes,
Yeah, we got your info. We'll follow up. We always try to do that,
Yes,
you know, just
I'll
in case.
follow up.
Are you guys anytime doing something in the near future, or is this kind of a more of a learning session for much later down the line?
It's more like learning.
Yeah.
We're just
Okay, good stuff. Like
Right.
most of the folks that do this, do just that. So that's good. Like I said, yeah. What I would do to help parents, bring them in August. Talk to Rosanna. Get a feel for where you guys at. Again, even if you're totally far, the longest for my clients was 2.5 years.
Yeah.
So literally for 2.5 years, we kind of followed back and forth. They started a plan, and then they're able to purchase. So I don't know if you guys are out that far, but it's good to know. And again, it gives her a chance to give you some good info too.
Anytime, guys, anytime you have a question, give us a call. Okay?
Cool.
Perfect.
Thanks, guys.
All right.
Muffins? I can't eat these. I'm trying to lose weight. Clearly not an issue. But no, you guys good?
Let's
Coffee?
go see them, we're gonna get in trouble.
Oh.
Thank you.
Oh, no problem.
Thank you.
My pleasure, guys.
Have a great night, nice meeting you.
Nice meeting
Guys, get home
And
safe.
we will
It was
send
a
you
pleasure.
your
Good to
gift
see you, my
card.
friend.
Alright, have a
Thanks,
good
guys.
night.
This, well, you know your way out, right?
Yeah. Right on.
Be safe, guys. Enjoy your long weekend.
Oh, yes, that's right.